Hey traders, TJ Watkins here. So Jerome Powell came out. He seems to at least be dovish enough for the market that they said, okay, we're happy with this, and the market started moving up. And so we have a combination of day trades and swing trades going on. I have a webinar coming up next Wednesday, March 26th, that I want to show you guys how I've been doing this, how we kind of saw the bottom of this market using some of the indexes that I look at, some of the clues, basically detective work and all the things that I look at to help show you how this market bottomed and that we should be seeing things move up. So be sure to log in. It's going to be simplertrading.com/duel. And as far as the market goes, we had a very quick 10% correction. We went from new all-time highs down to a little over negative 10% in about 3 weeks. It was very, very fast when they put the brakes on and said, okay, we need to reprice things. So we kind of saw some divergences start to show up also, which told us that the rest of the market was ready to move up, and we just needed the S&P to get on board with that. So what I did in one of our rooms, even right here, is where we decided to put on a put credit spread. This is essentially selling puts, but with protection to make sure that if in case you're wrong, it's not infinite, and so it doesn't take up too much capital in your trading account. So what we're doing here, and I want to show you guys that if you look at the SPX, it right from here, from our entry where we put up, it's up 1.2%. Our put credit spread is up over 20% at this point. And that is mostly because we sold puts, and so we just need price to move up a little bit, sideways up, because our short strike is 56.50. So we could basically be kind of anywhere around here, and I'd be happy because it's going to be losing premium, which is fantastic. That's what we want since we're sellers. And since the VIX is so high when we sold it, the fact that the VIX is coming down is also going to be working in our favor as well. So this is a really, really great trade for a market like this that has been hammered so hard that it is taking a little bit of time before it finally starts to move up. Time, in our case, is actually good for us. Now, I do think eventually we're going to move up higher. I'm kind of aiming for just under 5,800, and eventually I want to see if we can even get back to 5,900 as far as kind of a major move to the upside. I am concerned that this is still a bounce and a downtrend, but hey, we can still trade these bounces. What that'll also do is if we start getting up here, even if it takes a little bit of time, we will continue to make more and more gains on that trade. And I'm looking to cash it in probably around 50 to 60% profit. So I think that'll work. We're already at 20%. I'm looking for 50 or 60%. You do that a couple times and you're on your way to making a pretty good account. And that same strategy you can apply in a market like this that's going to be getting a little bit wonky, I think, in the future. But as far as what we're seeing here, we're starting to see progress. We first got price over the hourly 50, I think that was Friday into Monday. And then Tuesday, we saw a sharp pullback, but that's okay. This is the kind of retesting of moving averages and low areas for support that we've been looking for, which we saw right there. And then amazingly, we had FOMC today, so this is Wednesday when I'm recording this. We had FOMC and we're actually up in the morning on FOMC. Usually the market is pretty quiet on FOMC days until Jerome Powell starts to put his speech out there and starts answering questions. As you can see, we had a textbook test of moving averages right there. That was fantastic. Jerome Powell was speaking. The market said, okay, nothing disastrous. He's not hawkish. And up we go in through here. And so very, very happy about that day. Now, I know a lot of people were kind of commenting how we had a big move up and kind of big move back down. That's okay. This is why I'm more interested in going with put credit spreads in this situation, because it might take a while before the market finally jumps up here. It's got a lot of work to do before it gets up there. And basically any kind of trending upward above 56.50 is going to be fantastic for us. And that theta decay is going to be working in our favor. So that's what we want to see. I do also have a small trade on as far as a long call. We're doing a call debit spread, and that's just in case the market really does get a move to the upside in a very energetic way. So I've kind of balanced this for myself. 75% of this trade is a put credit spread, 25% is that call debit spread. And that way we should kind of cover our bases. So if the market's kind of blah, we will still make plenty of money. And if it's pretty exciting, we're going to make more money. So yeah, that's kind of how we balanced it. The other thing that I'm looking at is for my stock account. FNGA is the leveraged ETF of the FANG stocks and a few China stocks in there as well. And you can see the same thing. It's been recovering, doing pretty well. We did perfectly call the bottom of the market with this thing, and we bought in right here. And this has been doing pretty well. I think we're up about, kind of right there, about 9-10%. Actually, let's bring it back down here since we came down. So yeah, closer to 9% gain. Not too shabby. Ultimately, I'm looking for this trade. If we kind of look up here, I'm kind of wondering if we can get, anywhere between 30, maybe 35%. I'd be happy with 30%. That's still going to be a pretty big move if we can ultimately get 30% for that. If we do get 30% for something like this, we're probably going to get closer to 60 to 65% on that put credit spread that we're doing. So almost, double, and basically twice as much money with using those options as with just going with these leveraged ETFs. But thank goodness they have these leveraged ETFs, because that way we can still work with things that we just don't have to worry about theta decay in this case. It can be a little bit simpler, and people don't need to know about the complexities of options in this case. But yeah, this is exactly what we want to see. We want to see price come down here, start testing, and we want to start seeing things move to the upside. Now again, be careful. I am still concerned that after we get this bounce or this trend up, we are going to be running into the underside of downtrending moving averages. And I think if we come up here, we need to be careful about coming back down again. We'll again take this piece by piece. Right now, we're going to be taking this piece, and then after that, we'll see about the down piece. And then really that's the big question. Big question mark. If I can draw that actually a little bit better, like a question mark. There you go. Because once this pulls back, do we find support and we actually start moving back up and everything's forgiven? Or do we kind of come down here again and we actually start making lower lows? That's what we don't know. We're going to have to kind of see what our world, what our news, what our politics are like, what the tariffs are like. There's a lot of stuff that we need to just kind of wait for. The other thing, as far as seasonality goes, February, the second week of February, and this one certainly did not disappoint, is the weakest of the year seasonally wise. And so we just experienced this. Now, when the market has a strong pullback, we usually get a strong bounce, don't we? That's the whole point of a pullback, and by the dip, correction, all that kind of stuff. Therefore, the second half of March is seasonally the strongest. So go figure, right? February weak, March strong. That is why I'm still looking for a bounce here, even if it's bouncing a downtrend. And I think that we are just about onto that. I mean, we are into the second half of March. We have had a huge pullback like this, big 10%, very fast. And if we get a nice big move to the upside, that's going to help with those statistics and actually keep March as the second half of March, a very strong seasonal move to the upside. So let's see if we can kind of get that. We've got a handful of names that we're working with, Tesla and a couple others. We've been trading the gold miners as well, and things like that have been doing all right for us. So let's see what we can do. You can go ahead and trade any kind of names out there. I'm seeing a lot of setups that are looking exactly like this, where price is finally starting to get up and over the hourly 50. That should help get things a little bit higher in through here. And then, as I said, we'll take it piece by piece, careful about that resistance overhead, cash in on the way up, and then we can be free to see where we go after that. And if we need to, maybe we even take some short bets as we expect the market to pull back again at some point. All right, guys, thanks again. And remember, come on over here to simplertrading.com/duel. You can come check out the webinar. And then remember, we also have the class April 5th, Saturday. I'm going to be teaching you guys how to trade the Moxie system for both swing trading and day trading. We're going to be talking about zero DTE 1 week later. And then also how I used ETFs and leverage ETFs to help kind of read the market a little bit better, and those kind of clues that I see in there. All right, guys. Well, thanks again, and we'll see you at the next one. Hey, TG here with Simpler Trading. Thanks for watching. If you enjoyed this video, be sure to leave a like or comment below. Also, make sure to subscribe and click that notification bell so you can stay up to date with my market analysis. Or you can join my free newsletter with the link in the description. Good trading, and I'll see you at the next video.